Okay, so a quick summary. Looking at, I've posted the written text and charts, and this is just really to complement what I've already posted in my watch list. The indexes are all in bullish breakouts, so there's no argument to be had there. All right, we've already seen strong moves here. This is the US 30. It's broken through the week commencing 28th of July point of control very firmly. All right, so that is a bullish scenario. Um, but we have an overextended 8-hour situation. So we have, in other words, um, New York breaking out, or Wall Street, New York breaking out of the London highs, London breaking out of the Asian highs, and that's a 1, 2, 3 counter trend prospect if we get back below the London highs. But look at um, the might of that move. So not convinced that we're going to see a short potentially. Um, but my trading window is at 10 a.m. So although that was a setup to go long, the trend predator indicator picked up on it. It's not for me. I trade at 10 a.m. because it gives me a box. It gives me a high and low, the opening range of Wall Street, and I work from the high and low of the opening range always. Um, so the US 30, I mean, if it were to come back inside of London's highs, then that's a setup for me to go short, depending on how the price is behaving. It may or not draw me in. But if we look at the US 500 and 100, we actually have a multi-time frame. I've drawn it on the 100, I believe. We've got a multi-time frame 3L. This means they've got the monthly chart breaking up at least three consecutive months in a row, the daily chart doing the same, the 8-hour chart doing the same. So that's pretty toppy. As you can see, the US 100 um, is the weakest of the three, so I would look to sell weakness. And an opportunity to short below the London highs could arise. So let's just put that on our watch list. So potential short in the US 100. It's a low quality setup because you're trading against what is a very strong bullish market. So um, I would prefer to look for something else. I would prefer to look for a better engineered chart than trying to sell into get in the way of a steam train, right? But the bias is bullish, but there could be a short term opportunity to short, potentially back to the Asian highs, maybe back into the Asian VWAP, and then you've got to calculate, is it really worth it with your risk to reward scenario? So, I mean, it may get all the way back to the breakout highs from the prior day, no idea, but anyway, so that's potentially on the cards. The US dollar has been firmly bullish up until this point. It's starting to reverse back towards the previous day's lows. But so long as we stay below there, then we assume we are bid against the US dollar falling across the gold price. I've put the scenarios out for gold already, but just to break that down, 10 a.m. window coming up for trading. The ATR I've marked up there comes in around $46. Um, so if we were to break through the value area high from Monday um, on a move from above yesterday's highs, then if we get through that value area high, then we've got prospects of a move up into the previous week's closing price to challenge the breakdown area of what was Friday's consolidation and then breaking down in Monday. So that gives us a target area roughly in line with the ATR. If we look at silver, Um, Silver is not quite as convincing to the upside as yet. I believe we've got, yeah, so we've got 3 sessions of continuous breakout, which is somewhat bearish. Still, the bullish context is there. Day 2 breakout continuation from the high of last week. So if we stay above the highs of last week, then that for me is a prospect into value area lows on the TPO and the volume profile across the weeks. So that's a potential bullish case, but just not quite as bullish as gold. Gold, we're also coming out of a first green day. A first green day is a signal day to be trading in line with the previous day's bullish close. So yesterday closed bullish. So the thesis is today will stay bullish as well. We've got inventories coming out in US oil 10:30. So nothing to do until that data comes out. So I've said here, what have I said? 3 sessions inside. Okay, yeah. Okay, so this is nice. We've got an inside day yesterday. I like the inside days. An inside day setup. If we can't stay on the outside of the inside day lows, so we've broken down. If we can't stay down, then there are prospects of it coming back up through to the other side. That's not always the case that it will do so, of course not, but it's a thesis. It's something that plays out time and time again. Not specifically for oil, I mean in all markets. Inside days are signal days, and there are prospects of a breakout to the upside in what would be a day 2 continuation trade. Day 1 being, sorry, what am I talking about? Bear with me. A day 1. Okay, so it's a 3-day setup, but so Monday, Tuesday, Wednesday short squeeze, but it'll be day 1 longs because we're coming in from the lows of last week, the lows of this week. So the first day of longs on a day 3 of the week, a day 3 squeeze, first day of longs, so day 1 longs. We would want to take that above the Asian highs. So the closing price there is significant as well. So if we get back above that closing price, then prospects of a short squeeze up into the previous week's point of control, which is essentially yesterday's high. I can't remember why I've marked this off here. There's a reason for it. I'll have to go and look it up, but that's a potential resistance as well. I think, yeah, it was a point of control as well as being on the daily chart, as well as being the highs of London. So just watch that level there as well, 61.15-ish. Sorry, 63.15-ish. I'll just mark that off. Yeah, 63.15-ish. Now that's the bullish scenario. At the moment, we've got a bearish context, but the bullish scenario is into 3 days of shorts. So it's a short squeeze setup to go long. Other than that, if we are, I mean, as you can see, it's a 1-star setup currently to be looking for a short. That's because we're back below. We're back below the previous week's lows as well as yesterday's lows. So you've got we got a month that's breaking down. We're breaking down at last week's lows. We're breaking down yesterday's lows. We got a fake out high of the Asian highs as well. So that's bearish. So it's all looking quite bearish at the moment, but this can be the dump before the pump. So we're waiting for the news. So I'll leave that there. And we've got 5 minutes now until my trading window opens for gold, silver, and the indexes. And then I'm waiting for 10:30 for oil. And we'll see what we get.